Good day, ladies and gentlemen, and welcome to the Irish Funds Industry Association webinar for Managers Conference Call. Today's conference is being recorded. At this time, I would like to turn the conference over to Pat Lardner, CEO of Irish Funds Industry Association. Please go ahead.
Thank you, and good afternoon. We very much appreciate you taking the time to be with us this afternoon, and our objectives over the course of the next 45 minutes or so are to, one, cover a little bit of background about the fund industry here, but more importantly, and I'm joined by Deirdre Power and Aisling O'Malley here on the line, is actually to get into some of the practicalities. It's clearly our objective to make sure that, one, you're aware of the range of capabilities and options that exist for you as you look as part of your business strategy to undertake cross-border distribution, and also to get a sense of some of the practical things that you need to take into account. I might just take the first couple of minutes to briefly go through a little bit of a background about Ireland and how we've built a position as a centre of excellence in this particular area. Just flicking through to the first slide here, we can see that it is the case factually that where we're based geographically and in terms of our size, this is a small open economy. And as a small open economy and one that isn't endowed with lots of natural resources, we've had to be very, very innovative and have a long tradition in knowledge-based industries. That also, as well as encompassing financial services, covers areas like technology, software, medical devices, pharmaceuticals. And it's because of this that there is, both within the educational system and within the supports that exist from government, a very, very clear understanding that, given our position as a natural gateway between North America, Europe, Asia, and other parts of the world, that we sit in a quite a unique position to provide those services which allow, for example, fund managers to connect with investors. It's been fairly well documented in the course of the last couple of years that the outcomes of the financial crisis have borne a reasonably significant toll in a number of different parts of the world. And the Irish government and indeed the authorities have been reasonably well lauded internationally for taking a responsible approach. And we've been very encouraged here, particularly over the last 2 years, to see in the broader economy very, very strong levels of foreign direct investment, and that is companies cross-sector, cross-industry, actually putting down significant capital investment for long-term plans here. And we think it's down to the fact that there is a broad scale of capability. And we'll talk a bit more about that capability as it pertains to the fund sector in a couple of minutes. Finally, just at the bottom of the slide, and it's only one indicator, the measures that have been taken here and the normalization of the environment is in one way manifested by the decline in the rate or the interest rate that the Irish government or sovereign has to pay when it goes out to seek funding in the capital markets. And while these numbers actually are just a little bit out of date, I mean, you can see yields coming back down towards the 4% level. Indeed, in the course of the last week or so, with positive statements from the rating agencies and continued affirmation by the international authorities, we're seeing yields on Irish government debt in the 384, 385 level. So we have an open economy. It's all about skills. It's about being a gateway, and the environment exists here to support it. But why would the funds industry in a broader sense be important to Ireland, and why then does that mean that there is this strong partnership with the authorities? Well, as I said, we're a small open economy, clearly because we're meeting a very important global need, and that's the need for savings, not only for retirement provision, but for old age care provision as well, and the fact that we are effectively exporting services to support, in this case, fund managers from all over the world. And because of that, it actually means that the revenues and the commercial activity that is created in Ireland is not linked to domestic demand, is not linked to the domestic economy, and from the government and the authorities' point of view, provides a very, very important link into a recovery and indeed additional economic growth. It also means as well that we've maintained a very strong and close relationship with the authorities over the last number of years. And we just point at the bottom there's a little quotation from our Minister for Finance when he spoke at our conference back in June. And it really acknowledges the fact that, we have been an ever-present part of ongoing strong activity in the funds industry. And when you look at the network of providers and the skilled labour, clearly they are exactly the types of attributes that the government wants to promote for Ireland as a small open economy that is very well connected to the rest of the world. If we try to put some facts and figures around it, I mean, most importantly for us, if you look at the very top of this slide, you'll see that there are in excess of 900 fund managers or promoters using the jurisdiction. They're our clients. They're the people for whom we work. And over 400 of those have chosen to domicile funds here in Ireland. What that tells you is that this is a well-trodden path, and it is a path that has been utilized by managers from all over the world, from varying different investment strategies, at different stages of their own corporate growth as well. Those fund promoters have entrusted to us either through domiciled funds or through non-domiciled funds that we service, and it says they're 2.3 trillion, and thankfully we're in a position where our numbers get out of date fairly quickly, because at the end of June, the total assets under administration were actually 2.5 trillion. So you can see that there's been continuing growth. That is represented on the left-hand side there by the numbers of funds. So in excess of 12,000 funds, a little bit over 5,300 of those are domiciled, and just short of 7,000 funds are non-domiciled. But very importantly, from an investment management perspective, what about distribution? And those funds and those managers and the services that are provided here are allowing active distribution of investment strategies to over 70 countries around the world. So therefore, because it's a regulated environment, because of a number of characteristics that both Deirdre and Aisling will talk about, it is a very well recognized and respected way to access cross-border distribution. And at the bottom of the page, we just give a little explanation or indication that the reason that we have an ability and have had the ability over the last 20 years to do this is there is a very broad and deep network of capability, and that is across all the skill sets in each part of the value chain, whether it be from the creation or inception of a fund, and very importantly, right beyond inception, because once a fund is up and running, you need to make sure that the execution, the service flexibility, the timeliness, all fits in with you and the way that you're trying to run your business. The factors that drove the growth of the industry in Ireland, and indeed elsewhere, and this will become a very, very important factor and foundation of some of the comments later on, is that because we saw the development of a regulated investment product structures in Europe, and here we'll talk about UCITS initially anyway. I mean, UCITS have actually experienced their 25th birthday this year. So it is, in some senses, hard to believe that this particular product designation has been 25 years growing and developing. And I think a little bit like ourselves, by the time we reach 25, we should have achieved an amount of maturity and worldliness. And I think that we definitely see that in the broad acceptance of UCITS around the world. Clearly, this also happened against a backdrop of growing investment markets for most, but not all of that period. And as well as that, a realization within the asset management community that they themselves were globalizing their businesses, looking to extend and expand their reach to investors beyond their home market, and in so doing, increasing their potential for commercial revenues, diversifying their business as well in a very responsible way. We would have supplemented those macro factors with the belief, and just to be very clear, we are operating in a regulated environment. We believe that the existence of clear, transparent regulation against well-defined product frameworks like UCITS, and now we'll also talk a little bit later about AIFMD, coupled with that expertise and experience that I spoke about earlier on, is a very, very potent and effective combination to help the ongoing growth of asset management businesses. The next slide is titled Total Assets Under Administration, and really it just serves to show that there has been a continuing increase in assets here, bar 2009 where we had a dip, and I think that's well recognized that it occurred during a period of very, very significant global turmoil. So the fact that there's been this level of growth, and again, while we only go back to the year 2000 here, growth in Ireland has gone on for continuously, bar 2009, for some 23 years. The last slide I'll just touch on here before I hand over to Deirdre is that, importantly from an asset management point of view, distribution reach is crucial. And again, when you look whether it's in Europe, outside of Europe, in various parts of the world, there is no doubt that the product designations and structures and the services that we provide are both recognized, acceptable, and accessible by investors in very many markets around the world. That very, very quick Cook's tour served to lay a little bit of background. And what I might do now is pass on to Deirdre Power, who will just cover the next section of the presentation.
Thanks very much, Pat. Just following on from Pat's comments, particularly where he brought you through the background of the funds industry, its growth, distribution reach, I thought it was useful just to put up on the next slide what exactly are the key factors that we find in talking to asset managers that makes for them Ireland their location of choice. And Pat will have talked you through some of these already in terms of the scale, being 2.5 trillion of assets under management. But I'd particularly like to bring a couple out a little bit more in terms of the experience. Pat mentioned on the previous slide 12,000 people employed in the industry. And those 12,000 people have a huge amount of expertise and capability. For example, they deal with, on a daily basis, a diverse range of products, everything from the UCITS product that Pat mentioned to products that include real estate, money market funds, hedge funds, fund of hedge funds, private equity funds. And I know Aisling will be touching on some of these a little later on. But I think it goes to the point that the depth and expertise of the industry here is very vast. And I think that also leads in nicely to the next point around innovation. Because innovation, I think, again, there is something here which is not found in many jurisdictions. It's around that partnership between the industry, the regulators, the tax authorities. So working closely with the asset managers being key, obviously, working closely with asset managers, not only to see opportunities that they see and make sure that Ireland has the products that they need, but also looking to be ahead of the curve. And as I say, Aisling will talk a little bit around the AIFMD, particularly in terms of how Ireland has been planning for that. But I wouldn't underestimate the importance of that partnership approach in making sure that we're bringing the products to market, even in advance, perhaps sometimes of when you actually really know that you need them. Pat also talked about the global distribution, the reputation. I'll talk in the next slide on favourable tax environment, and Aisling will talk a little bit about the regulatory environment. But one thing that I think constantly amazes clients when I'm talking to them about Ireland as a location is the fact that we are number one for hedge fund administration globally. I think the numbers are around 40% of all global hedge funds are serviced and administered in Ireland. And that again goes to that whole point around expertise and depth of knowledge. Pat has brought you through the government support, and again that's reiterated too in our ability to be nimble in working with the regulatory and tax authorities in bringing product innovation to the fore. Moving on to the next slide, just very briefly, here's a note on tax environment. And there's a few bullet points there, but if I could leave you with one key message, it is that for funds that are being marketed outside of Ireland, so being sold to non-Irish investors, the message, quite frankly, is quite simple. And as a tax person, you might say, well, tax people don't generally try to make things simple, but in this context, the Irish industry has been very focused in making sure the message is simple. And it is this: there is no Irish tax at the fund level. And that's a very key point, because it means that in structuring your product as an asset manager, you know that from an Irish point of view, you don't have to worry about if the fund itself is tax neutral. So it means in paying out dividends or distributions to your non-Irish investors, there's no tax there. It means that really the only tax angles that you have to concern yourself with are from the point of view of the investor: where are they located and what is the tax implication for them in their home country on their gains or income from the fund. And also in terms of the investment location, what are the tax implications, be they withholding tax or capital gains tax, in the country of investment. So it becomes very much an investor and investment discussion, as opposed to we take the whole fund structure pretty much out of the equation and make life a lot more simpler. There is a requirement I've just mentioned there that for non-Irish investors, in some cases to get declarations, to say you're non-resident, it's quite simple. It's normally built into the application form. But there are other ways that you can deal with not having to collect those declarations, and you can apply to Irish Revenue to make use of that exemption. It's also worth noting Ireland has a corporate tax rate of 12.5%. Now this is quite distinct from the fund, which, as I said, is tax neutral. But for Irish service providers, and Pat has brought you through some stats in terms of people who are here and entities that are located here and service here, but there's a very attractive 12.5% corporate tax rate for anyone that's looking to set up service provider operations here. And again, going back to the fund level, Things like stamp duty, capital duty on either establishing the fund or merging Irish funds, that doesn't apply. There are special exemptions in there specifically written for Irish funds. Likewise, unlike some other jurisdictions, there's no question of an annual subscription tax. It does not exist in an Irish fund context. And even in our VAT laws, from the very early days of the industry being established here, the Irish tax authorities were careful to include VAT exemptions to apply to services to funds, and they're still there. So overall, the framework ensures no Irish tax. Just moving on to the key parties, and again, as Pat mentioned, the asset managers are obviously key to creating the fund product in Ireland. And here's just the various, if you like, parts that the participants play. So in the context of the Nordic region, obviously the promoter, somebody who would set up the fund, the investment manager who carries out the day-to-day investment management, are very key in driving the Irish product. And even in the context of board of directors and management company, what we look to there is that the fund structure that you decide to choose, and again, Aisling will bring you through the various structures, but very often, if it is a unit trust structure, for example, that you might decide to choose, a management company is needed there, and very often the investment manager will want a seat at the board of that management company. If it's a corporate fund, then obviously the corporate fund has a board of directors, and again, the engagement very often is that the asset manager will want a seat at that board. In the context of the role that Ireland plays, obviously it's key to making sure that the day-to-day operations of the fund are looked after. And it's the whole life cycle of the fund, from the establishment of the fund, be it the legal advisors, the tax advisors, to the ongoing servicing and administration by the custodian, the trustee, the administrator. So the fund obviously will be located in Ireland. The investment management, and you'll see in later analysis, you'll see the investment management can still stay in the Nordic region, and that's a question that we often get asked: does the investment management activity have to happen here? No, it can stay where the centre of expertise is. And then the service providers are all Irish. The next couple of slides, we're just going to focus on some, when clients come to us and visit Pat saying, why Ireland? What do I need to think of? What are the kind of things that I might look at? The considerations are common questions that we've just put on the page here, but really do your homework. It's always a good idea to have conversations with a wide and diverse range of people in terms of their experience. It could be asset managers who already have products here. It could be IFIA in terms of their knowledge base. It could be your legal advisor, tax advisor, in terms of what are they seeing, give you a good feel for it. But there is nothing like coming here yourself and seeing for yourself the activity, the vibrancy and the culture. And as it says there nicely, get a good feel for the business culture. I think the other thing that people are surprised about is just how open door everybody is, in terms of even people you might consider your competitors are very welcoming in terms of sharing their experience of being here. And meeting with the regulator, some clients are very amazed by the fact that the regulator is so accessible and willing to talk business in terms of what you might like to do here. Distribution strategy. Again, I go back to two basic questions I always ask clients is, who are your investors going to be in your fund product, and what is your investment strategy? So looking at it always from an investor and an investment perspective. And that goes to some of the points that Pat was talking about in terms of, well, what country are you going to distribute? How are you going to distribute? For example, you need to consider registration requirements depending on whether you have a UCITS or a non-UCITS product. And obviously there can be tax reporting depending on what countries your investors are in. And who you're selling to, are you selling to high net worth, institutional investors, pension funds? That all factors into, as Aisling will bring you to, maybe some of the decisions you need to make on what your product might look like. And that leads in nicely to understanding the regulations. Do I know, based on my fund product, what are the rules around it? What do I need to keep in mind in terms of leverage? Can I have leverage in my structure? What are the investment restrictions? Or indeed in some products, non-UCITS products, there are no investment restrictions. So again, that investment and investor focus will drive much of that discussion. And then the day-to-day operation of the fund. Consider, what is the day in the life of your fund going to look like? What interaction are you going to have with the fund accountant, the transfer agency, and indeed, do you want to be extremely hands-on, or maybe do you want to have a little bit more oversight rather than actual day-to-day activity? And all of that is very personal to you as an asset manager and working with your service providers on the structure. Moving then on to the tax considerations. Again, I've talked to you in terms of how easy it is in terms of an Irish context that funds pay no tax, but some of the considerations clients will want to think about is, well, actually for, again, my product strategy, my investment strategy and my investors that I'm targeting, do I want a tax transparent fund? We have plenty of them in Ireland. Do I want a tax opaque structure? And they're part of the analysis that will be carried out on the tax front. And then questions like treaty access, looking at things like the capital gains and the withholding tax aspects of the investment location in terms of your investment strategy. All of those need to be considered. People often ask, and it's the first question I'm sure that they probably ask Aisling is, how much does it cost to set up a fund? How much is the annual running? But these are questions that you should ask, and also consider what are the running costs on a year-on-year basis, year 1, year 2, year 3. So, again, that's something that your advisors can help you with. Timelines, again, a good question is how long will it take from the time of having your documents to being able to be up and running? How do you work efficiently with all of your service providers to ensure it's set up in time? And sometimes, you need a good project management infrastructure around it. But I think the key thing is that the service providers are so knowledgeable here. They've done it all before. You're not the first person to ask them these questions, and you're not the first person to set up a fund. And there's a very good machinery to making sure that it all happens and taking effectively the headache out of it for you and walking with you on the journey of getting your fund product to market. Just two very brief case studies here, which will then lead nicely into Aisling's segment. The first one there is a Nordic fund manager, again wanting to distribute by having an Irish UCITS product and selling into Europe and Asia. Now, the fund manager in the Nordic region establishes the UCITS fund, which will be regulated by the Central Bank in Ireland. Now, again, to reiterate, the investment management activity of the Irish regulated fund can still happen in whatever country you wish. In this case, it's the Nordic asset manager, then presumably you will want to have your asset management there. But it is so flexible in terms of where that asset management can take place. But in terms of the actual day-to-day running on fund accounting, TA and custodian activities, they will happen in Ireland. And as you know, all the custodians in Ireland have a multinational global base, so therefore very well suited to serve you in that regard in terms of making sure that your assets are safe. As the fund is a UCITS, then it is subject to specific investment and borrowing restriction, but it is the result that you can get to a very wide church or marketing strategy and distribution strategy in terms of UCITS because of the ease of distributing it across Europe. But as I say, the key thing is the investment management can still happen in the Nordic area and the actual day-to-day happens in Ireland. Moving on then to case study 2, the difference here is that you're talking about a non-UCITS product, a qualifying investor alternative investment fund, a QAIF for short. And again, the same thing that happens here, but the difference really is that because the fund is marketed to institutional investors, the investment and borrowing restrictions are significantly reduced, and you really have, as an asset manager, more flexibility in determining your portfolio composition. Now again, the QAIF structure is compliant with AIFMD, and now there is an AIFM required, so it will either be a separate AIFM depending on your setup, or it could be a self-managed QAIF. But maybe before I go, and I certainly won't delve into AIFM, I'll leave the experts to deal with that, but I think it is a nice link into Aisling and her slides in relation to the regulatory considerations.
Great, thank you very much, Deirdre. Good afternoon all. I'm a partner in the Financial Services of Dilling Eustace, and I'm just going to touch on a couple of the regulatory considerations that Deirdre just highlighted there. I'm going to take you through the two most popular fund products in Ireland, which are essentially the UCITS product and the Qualifying Investor Alternative Investment Fund. If we consider UCITS funds first, the UCITS product is created pursuant to an EU directive, and it is without doubt a truly global brand. Originally introduced almost 25 years ago, UCITS have become the gold standard EU investment fund product, recognised not only by the European financial services community, but also further afield, where it is possible to register it for public sale in up to 70 jurisdictions across the globe. As Pat mentioned earlier, the distribution reach extends not only to Europe, but also the Americas, Asia, and the Pacific, the Middle East and Africa. And as more and more investors become familiar with the UCITS product, it becomes a product that is easier and easier to distribute, and therefore makes the sales process a lot easier for you. As regards Ireland's success in the UCITS sphere, again, as Pat mentioned earlier, we have been extraordinarily successful over the last number of years. In fact, we've been the fastest growing UCITS domicile in Europe over each of the last 3 years in the context of assets under management and growth. In the context of timelines for setting up a UCITS here in Ireland, we certainly have a big edge overall in the EU jurisdictions, as establishing an Irish UCITS product will generally take on average 8 to 10 weeks to do so. Of course, that does depend on the complexity of the product, but it is quick and prompt. When you compare that to other EU jurisdictions, in some cases you might be looking at a process that takes 5 to 6 months. So there is definitely a significant advantage from a timeline perspective in Ireland. As well as being faster, I would say that it is also more cost efficient, and part of that relates to the timeline to getting the product established, but also the responsiveness of the service providers in Ireland, and that certainly helps to lower costs. Ireland is definitely one of the preeminent jurisdictions as regards the UCITS product, with the result that promoters from all over the world, including the Nordic region, have and continue to use Ireland as the domicile of choice for UCITS products. There are currently a number of Nordic promoters who have established UCITS funds here in Ireland, and I've seen promoters from Finland, Norway and Sweden, and feedback I would have received from those with regard to setting up in Ireland was extremely positive. So just moving on, the UCITS Directive sets out the investment restrictions which a UCITS fund must adhere to, and whilst there are a strict set of investment restrictions, these do provide potential investors with certainty as regards what UCITS funds can do in the context of their strategies, and that gives them a greater level of comfort in the context of making their investment decision. The principal focus for a UCITS is on portfolio diversification and liquidity. UCITS funds invest in transferable securities, essentially liquid securities, and liquidity really is the key feature for the UCITS product. UCITS funds must deal at least once every 2 weeks, and investors must be able to subscribe and redeem within that period, and that is a regulatory requirement. More often than not, UCITS funds, however, tend to have either daily or weekly liquidity. As regards borrowing, this is dictated by the UCITS Directive, and borrowing is limited to 10% of NAV on a temporary basis only. Just to note that borrowing and leverage are two different sides of the coin, and a UCITS can achieve a degree of leverage through the use of financial derivative instruments. So there is a flexibility there, and a lot of UCITS funds are actively using derivatives. In the context of eligible assets, as already mentioned, transferable securities, but also a UCITS is permitted to invest in money market instruments, financial derivatives, deposits, and indeed other collective investment schemes. There are certain assets which a UCITS fund is not permitted to directly invest in, for example, gold, property and real estate, and commodities. That said, a UCITS fund can gain exposure to these asset classes. For example, a UCITS can invest in commodity indices, and a UCITS can potentially take exposure to property or gold through investing in companies that are active in those areas, either buying shares in such companies or indeed acquiring debt. Importantly, the UCITS product is not a product which has stood still, rather it has and continues to evolve over time. We started out with the first UCITS Directive, and this was followed by UCITS 3, which led to a significant broadening of permitted asset classes and more robust governance requirements being introduced. More recently, a series of additional changes have been implemented under the UCITS 4 Directive. For example, the European passport process for UCITS has been simplified, making it a very efficient 10-day notification process. And just to mention, many Irish UCITS funds are registered for sale in the Nordic region, and the process is quite straightforward. UCITS 4 also introduced the UCITS master feeder type structures, created a framework for cross-border UCITS fund mergers, replaced the simplified prospectus with the key investor information document, and introduced further measures in relation to the UCITS management company passport. We are now looking to UCITS 5, which is intended to enhance certain measures within the UCITS framework, particularly in relation to investor protection. The purpose of UCITS 5 is to bring the UCITS regime into line with the Alternative Investment Fund Managers Directive. UCITS 5 essentially covers three key elements: the depository role, which covers eligibility criteria, liability, delegation and oversight function relating to cash. It also covers manager remuneration and regulatory sanctions. If we just briefly consider the context of depository liability, the aim of the directive is to enhance the liability regime so as to introduce a form of strict liability for depositories. Currently, the depository is liable for any loss suffered by a UCITS as a result of its unjustifiable failure to perform its obligations or its improper performance of them. UCITS 5 seeks to significantly extend the liability of the depository to the UCITS and its shareholders for loss of any of the assets held in custody by it or its delegates. The depository will be obliged to return assets of identical type or corresponding amount to the UCITS without undue delay. In the context of remuneration, UCITS 5 proposes to oblige UCITS management companies to establish and apply remuneration policies and practices which will promote effective risk management and discourage excessive risk-taking which is inconsistent with the risk profile or fund rules governing the relevant UCITS. And finally, there are also talks about UCITS 6, which does again demonstrate how this product is continuously evolving. With UCITS 6, it's expected to focus on the products that a UCITS fund can provide for and the strategies that it can follow. Just moving on to the non-UCITS qualifying investor alternative fund, and as with the UCITS product, there are a number of Nordic asset managers which have existing QIF structures in Ireland. Whilst the UCITS product is really a risk-averse product, the QIF, on the other hand, is a very flexible product designed for the institutional investor, taking account of their sophistication in the context of strategies that a QIF can pursue. The QIF has a minimum subscription requirement of €100,000, and the type of products that you see in the QIF regime are hedge funds, fund of hedge funds, private equity funds and property funds. Unlike the UCITS product, it can be a highly illiquid product in that it can be a closed-ended product where there are no redemptions. It can have limited liquidity where perhaps you might only permit shareholders to redeem once a year, or indeed it can be an open-ended fund which deals on a regular basis, so for example daily, weekly, monthly or quarterly. So again, there is great flexibility there. As Deirdre mentioned, the QIF has very few investment restrictions and there are no borrowing limits that apply to a QIF, so it is really left up to you, the asset manager, to determine the restrictions and the limits that you want to apply to the fund and to the strategies you follow. Similar to the UCITS product, a QIF can now benefit from a European passport and market to professional investors within the EU. As regards timing, the QIF product itself has next day authorization, so again it is a very quick product to establish. If we just consider the AIF developments, the European alternative investment funds industry is dealing with what is perhaps the most fundamental change in its history, as it now comes to terms with the implications and potential opportunities offered by the Alternative Investment Fund Managers Directive. Ireland is AIFMD compliant, and the AIFMD Directive applies with effect from the 22nd of July here in Ireland. As regards the motivation for AIFMD, basically it was politically motivated, and this is driven by a concern that the hedge fund and private equity fund industry had a systemic risk for the European Union, and there was a driving element of wanting to be more aware of what hedge funds and private equity funds in particular were undertaking in their activities in Europe, and being concerned about protecting the European Union and the financial services industry in the context of those activities. And so the principal aim of AIFMD is to establish common requirements across the EU member states for the authorization and supervision of the managers of alternative investment funds, to address the potential prudential risks which might arise from the activities of alternative investment fund managers, and ultimately provide greater protection to investors through transparency obligations, custody liability rules, fund valuation and fund manager level organisational requirements, and to create a single market for the marketing of non-UCITS collective investment schemes to EU professional investors. We think it's a huge advantage for Ireland the fact that we have the self-managed investment company regime, i.e. that the corporate fund can be both the alternative investment fund and the alternative investment fund manager. The benefit of that being that as regards the AIFMD regulations, the majority will apply to the fund as the AIFM rather than you, the asset manager. And so just moving on to the next slide, the corporate structure. This is without doubt the most common structure and very popular, particularly in the context of selling to European investors. As already mentioned, this can be a self-managed structure. Now, whilst there is reference to a manager, it is optional, it's not a regulatory requirement, and more often than not, the management company is not appointed. So it would be the variable capital company directly appointing the Nordic-based investment manager and the various service providers. Just moving on to the next slide, the unit trust structure. Whilst perhaps a little less popular than the variable capital company, it is certainly still a popular product. Unlike the variable capital company, the unit trust is not a separate legal entity in its own right, and rather a management company is required, and the management company and the trustee constitute the unit trust pursuant to the trust deed. In this case, it would be the Irish management company appointing the Nordic-based investment manager and then the various service providers. Of course, each of the corporate structure and the unit trust structure can be set up as single cell structures or umbrella structures with multiple sub-funds. So that's just a very brief synopsis of the two most popular fund structures that are available here in Ireland.
Well, thanks very much, Aisling and Deirdre. We've tried to cover actually an awful lot of ground in what's been a relatively short period of time. Now, in a moment or so, we will open it for questions. I suppose just a couple of closing remarks from me. Our objectives at the start of the webinar were to try and give you a feel for, well, one, why is and why has it been the case that Ireland is a centre of excellence in this particular area? What are the practical ways in which we can support you? What are a number of the key practical considerations you should think about in setting up a cross-border structure? And importantly, the regulatory backdrop. In the appendix to the actual document here, which we won't talk through, there is actually an indicative timeline in terms of authorization and setup. But we might just leave you with the points that, irrespective of the nature of your fund management firm, whether you're a large firm, whether you're a smaller firm, whether you're running single strategies, multiple strategies, whether they are more traditional, whether they are more alternative in terms of nature, we had the experience and have had the experience for over 20 years of connecting fund managers of many different shapes, sizes and colours to global investors all over the world. And we do that because, as Deirdre made the point, we have expertise, there is an accessibility and a willingness to do the business here, there has been innovation, and there is a very, very strong commitment that if we can and continue to provide strong product frameworks and excellent services, it allows you as fund managers to concentrate on the very difficult jobs of generating performance and raising investor capital. And anything that we can do to help support that activity is clearly our objective. So with that, that'll conclude the formal remarks, but I might ask our operator if there are any questions on the line. We'd be glad to take them.
Thank you. If you would like to ask a question at this time, please press the star or asterisk